Good morning. Let's talk about the market. It was another little bumpy ride this week. Volatility is definitely back. Dow Jones off 1% for the week. We're only up year to date about 2.5% by now. S&P off 0.5%. Still up over 10% for the year. Nasdaq down 1.1%, up over 11.5% year to date. The MSCI International Index off almost 1% this week. Year to date up a little over 4.5%. The 10-year Treasury flat, closed at 4.5%. Saw yields jump up a little bit this past week. And oil at $77 a barrel. So year to date, we're still up over 7%. Not bad. And I wanted to call your attention to something. With short-term interest rates rising this past week, and we're seeing, again, some of the nicest levels we've seen in fixed income, especially on the short end in the last 20 years, there's been a tendency for people, and I've been hearing this regularly, well, maybe we should just put our money in money markets or buy, a 9-month CD. People are gravitating towards these 5% yields on short-term bonds and CDs. I just want to make sure you understand that you should be thinking about diversification when it comes to your longer range money, your bucket of money that's going to be kicking off income maybe in 15 or 20 years from now, particularly if you're thinking about retiring. Don't get lured into just sticking it all in this short 5%. No brainer, right? I've heard that a few times. Because since the 2-year Treasury pierced the 4.5% mark, that was mid-October 2022, the stock market's up more than 50%. Think about that. 2-year yields peaked at 5.21% 7 months ago. And since that time, stocks have returned 23%. So if you were just stuck in that 5%, again, not there's anything wrong with that, but you would have missed out on a whole bunch if you had everything in there. Now, also, the market right now, as we've been talking about, it is broadening out. Utilities have basically beat technology since March of this year, being up almost 16%. And then next is communication services up 8%, energy up 6.7%. So that's the broadening out of the market. And that's where you want to be. So expect that to continue. Expect volatility continue, just like I've been talking about, with all the uncertainty that's happening this past week, with of course, more uncertainty as we get closer to the election. What's going to happen now? Right? The trial, the decision's going to come out a few days before the nomination, right? Is that going to actually go through? I mean, what's going to happen? It's really a lot of unknowns. So, you don't necessarily want to be playing around with your future if you're getting ready to retire or thinking about retiring. You want to make sure your income's consistent, your portfolio, at least the part that you're counting on, will be there to protect you and your family, and make sure that it's there.